Yo, welcome to the show.
Yo YouTube, what is good? Welcome back to another video. We're back, Zero to Hero Investing, and this one, it's probably a long time, maybe the first time some of y'all are seeing this portfolio. This is my Roth IRA inside Robinhood. I've talked about it before, but not really shown it much lately because I had already maxed it for 2024 and wasn't really moving too much. But since the new year, I have I've restarted my contributions and I just want to start tracking that on my YouTube channel again. So, welcome to my Roth IRA. It's sitting at $17,753.70 at the moment. It's Sunday evening, so the markets are closed. They were open on Friday and it tanked pretty well on Friday, down about 1.4%. But this video is just going to be a quick overview of my Roth, just like how I do with my normal taxable portfolio. Just go over the holdings I have, so whatever details I feel might be important to share on my YouTube channel. So if you're not familiar with what a Roth is, it is a retirement account. It's a Roth IRA, individual retirement account. You are allowed to put post-tax money in. So after you get paid, you can pull however much you want. There is an annual limit. This year it's $7,000 unless you are, I think, 50 plus or something like that. You have like 7,500 or 8,000 because you have less time. They allow you to catch up. And you can deposit that into an account. The good thing about a Roth is that whenever you reach 59 and a half, you can pull this money out tax free. So whatever gains you have or losses, whatever you pull out after the age of 59 and a half will be like, there is no tax on it. So if you made $10,000 off of one single stock of Tesla, you reap $1,000 after 59 and a half. Otherwise, you would pay like a 10% withdrawal fee, I believe, plus the tax you would have paid on the gains. I'm not sure, and I kind of don't want to know. But yeah, let's just look at how my thing's performing. I've been doing this for about a year and a half. I think I started around August of 2023, and it's now January of 25. Let's look at the timestamps. On the day, you can see we're obviously down 1.34%, up some after hours on the week. We are down 1.7%. And the markets have been so volatile lately. Don't really mind it. I kind of like that it tanked. Like the markets plummeted just before the start of this year. Don't mind. Just means cheaper buying opportunities for my Roth. 2.35% were down in the month. That's all right though. 3 months we're down 0.05%. I would call that break even. Year to date, since the start of the year, we're down about 0.25%. 1 year, we're up around 18.9%, I would say, and then all time sitting up around 22.5% in the green. So that's around $3,250, let's say, of share price appreciation. Like I said, this year there is a max of you can, if you're playing normal game like me, like no extra rings and bells or bells and whistles, whatever. It's $7,000 so far. I've deposited $1,000. I just went in and did a lump sum deposit like last week, and I just did that so that, I don't know why I did that. Actually, I had my reason. So going forward, I just want to keep a consistent $100 a day, or maybe 110 or 111 a day for my Roth, or a week for my Roth, and just keep that. So 50, whatever that number is, 50 times that number, then I'll cover the remaining balance within the last week or two of December. So hopefully that makes sense. I just dropped 1,000 to like front load it. Let's say 50 times 100, that's 5,000. That's already 6,000. And then the last 1K, I might just go in and do like another lump sum deposit. Does that make sense to anyone? And then that's how we'll reach the 7K. So yeah. That is how I plan to do my contributions. Like I said, 1,000 upfront, 100 every week for 50 weeks, usually on a Monday. I'm sure there'll be some holiday Mondays in there. I'll have to do a Tuesday, same thing. And then at the end, I'll do another 1K to close it off. All right. So far I've made $1,000 or $10 in matches from Robinhood. If you're not sure, Robinhood does give you a 1% match every time you deposit inside your Roth IRA. So if you max your Roth IRA inside Robinhood, you're guaranteed an extra $70 just for being a Roth IRA inside Robinhood member. Yeah. I've been taking advantage of that. Obviously, there's no choice to not do that. So it's free money. There is an option to get Robinhood Gold, and I think up to 3% or something. And I think it might be worth it, but I just don't want to have to. I don't want to do that. It just seems like another thing to do. Don't want to do it. So finally, let's look at the stocks and the options. The one option we have. So we have a Ford call which we bought probably I don't know 4 or 5 months ago. Was doing well at a point, and then Ford just completely reversed. Ford was at $14, maybe even trying to touch 15 at one point. Now it's struggling to float above 10. We have a couple months until expiry for this. Honestly, the $39 that's left, it's nothing to write home about. I might just let this run to expiry, whether that ends up being worthless or it might regain my losses. Let's just see. At this point in time, I'm not worried, not stressed. I feel like I'm slowly building my Ford position back up, given that it's in the nines. Like, I cannot not do that. So I'm not gonna go crazy, but every now and again, I come in and I buy some shares of Ford, and I can see my Roth IRA portfolio slowly growing in terms of in terms of the varying positions. And I like 7. I like 6 too, so if I can get it down to 6, I would. But right now we're at 7 positions. One's Ford, SCHD, SPLG, SPMO, QQQM, Vici, and Rocket Lab. Ford is a stock. Everybody should know Ford, automotive company, based in, I want to say, Detroit, Michigan. They make the F-150, F-250, all that good stuff. American based, which I think is a huge plus for this company. There's obviously Tesla, kind of different but very similar, same space, so they have to be similar in some sense. I just think Ford is a company that's going to be here forever. I think even though it's struggling, and it might not be like a Tesla in terms of share price appreciation, it's just like a guaranteed, almost like a blue chip stock in my head at this point. Pays a great dividend, not the greatest in terms of growth, but still, I mean, it's a strong dividend. It's a really big dividend relative to everybody else, to be honest. SCHD, dividend paying ETF, Charles Schwab Dividend Equity ETF, 143 shares at the moment. I believe this is our only like dividend focused ETF at the moment. Vici we do get, I guess, a good dividend from, but SCHD is made for dividends. We're just continuing to grow that boy as much as we can. SPLG, we have 63.5 shares of that. Down, well, that's just the daily performance. So SPLG is like SPY, but just a cheaper version of it. It tracks the S&P 500. Can't really go wrong with that, in my opinion. Just like that, we have QQQM, which is a cheaper version, price-wise and expense ratio-wise. Cheaper version of QQQ, just like how SPLG is to SPY. QQQM tracks the Nasdaq 100, which I think is just an amazing thing to track. So one of the staples in my portfolio is QQQM. In my Roth IRA, I have the M, and in my normal taxable, I have the plain QQQ version. Vici is next on the list here, 59.78 shares. This is a REIT, so they own properties, they get rent from that, and they kind of pay the shareholders some of that rent, a lot of that rent actually. I don't mind that. It is taxed at a different rate, I guess. I'm not really concerned with that. It's just a higher dividend in my eyes. The more money you make, the more you pay in dividends, whatever. Or the more money you make, the more money you pay in taxes, I should say. So it is what it is. Next we have Rocket Lab, and Rocket Lab is the newest position in the portfolio. Wouldn't really guess so based on its size, but we're sitting at 40 shares of Rocket Lab, and it's just a space company. It's an industry that I think is Not booming right now, but it has so much potential, and obviously that's what I'm investing in, the potential, specifically this company, because I think it's so cheap share price wise and just has so much potential. The industry or the area in general has so much room for um, opportunity, let's say. And this is really just the one that I chose. So if you want to look at it like that, you can. It's just $1,000 in that position, and a good chunk of that honestly has been the share price just going up. So I see total return for Rocket Lab. We have made around almost $200 so far, 20%. I won't complain. I've been invested in this for maybe, I don't know, 2 or 3 months, if that long. Wow, I'm not sure. But keeping that position relatively small, of course, it's the most speculative in my opinion. Speculative mean high risk, high reward. So not like, I don't know. Let's just see what happens. To be honest, that's all we can do. Not planning on selling out to Rocket Lab, just kind of curious and interested to see how it plays out. Let's come over here to see what our splits are like. Just quick view of the pie chart. Roughly a quarter of the equity or a quarter of our portfolio is in SPLG or the S&P 500. That's a good thing in my books. The next quarter is in QQQM. Don't mind that at all. SCHD taking up around 20%, if I'm guessing. SPMO, that's SPY or not SPY. It is a subset of the S&P 500 that is just stocks that have more movement. It's called the S&P. It's like a momentum ETF. Yeah, that's what it is. We got Vici, I don't know, maybe around 8%, and then Rocket Lab, and then Ford. Ford's going to slowly grow, of course. And in the midst of all of this, we've been collecting dividends, I should say. I am going to start trying to do a monthly Roth IRA update for you guys where I talk about the dividends, where I talk about just the monthly performance and yeah, just a monthly report on my Roth IRA. 12 of them a year, easy peasy. We can do that. Seems like something that's worth sharing. So if you've made it this far, honestly, thank you guys so much for watching. I will see you guys in the next one. Peace.